Hey traders, welcome to Charts and Coffee. Shout out to the folks on YouTube, Facebook, Twitter, as well as our training room. Great to see everyone. Happy Tuesday. All right. As always, gang, we're going to dive into your questions, whatever they may be. So feel free to type them in. First come, first serve on whatever channel you're tuning in on. Quick lap through the market. What I like to do when I'm looking at just a general pulse of what's going on is I'll take a quick peek at Euro, S&P, and the bond market. It gives me an idea of what's going on in the indices, obviously, in treasuries, and in currencies. And that's, for me, the easiest way to just get a quick pulse of what I'm dealing with. This could be first thing in the morning. This could be if I'm going to trade the Asian session. This could be any time of day. It's just a really easy way to understand sort of the mood of what's going on in three important corners of this larger thing we call the market. And I see a question popped up here. Can we take a look? Is there a good time to buy the 6E? So let's jump right on into it. Jay, yeah, that's perfectly timed question. Is this a good time to take a look at the 6E? So for those of you that are not familiar with what the 6E is, it's a futures contract that represents the euro single currency, really basically versus the US dollar, which is to say, is the euro gaining on the US dollar or is it losing ground? An uptrend on the 6E is the euro gaining in value, specifically against the US dollar. Overall, we have been looking at an uptrend in the euro. There's no question that there is a whole lot more interest to the long side than the short side. And the reason for that is because the European Central Bank is still in that nice hiking cycle, while the US Central Bank is at the end of its hiking cycle. The question is, where can we buy it? There's a couple really nice Darvis levels, automated support and resistance levels based on not exactly the same process that Nicholas Darvis introduced in late 50s and 60s, but definitely based on it, definitely inspired by it, modernized. It's the Darvis 2.0. And the closer we get to about 109.75 to 109.53, that would be a really nice oversold zone. If we're thinking there could be more volatility in the euro or the US dollar, because both will impact this currency, we can look for something closer to 109.20. So what is going to be a pullback is really going to be based on, do we have a trend, which we are borderline still in, although it's getting a little wobbly, and then where's the support that we can buy in that trend. All right, so thank you for that. And that's how I'm going to look at that euro. Very important currency to keep an eye on to understand the dollar. All right, next up. Hey there, Jack. Thank you for the weekly newsletter. Greatly appreciated. Jack, I'll tell you what, I was an English major. I was a double major in college, English and psychology, but I loved being an English major. And I love to write. And it's such a great way for me to brain dump every weekend what it is that we're going to be dealing with, most likely based on data, based on trends, based on dollars moving in and out of the market. And it gives me a compass. And I thought, you know what? I do this for myself. I have for well over 25 years. Why not just share it with everybody and add some charts and a little bit of structure and unleash it. So I appreciate that, Jack. Y'all can check out the weekly newsletter that Jack's referring to is This Week in the Markets, and you can check it out at thisweekinthemarkets.com. All right, next up, Lincoln Park says, my favorite short, Simon Property Group, SPG. All right, let's take a look at Simon. If we're taking a look at SPG here, and if we're thinking about Simon Property Group in the bigger context of the sectors that it's weighted within, think about Simon. I think about things like XLRE that are below their 200 propulsion. SPG is probably a pretty good example of weakness below that 200 as well. It's not a downtrend any longer based on, again, everyone has different criteria for what a trend is. But if I can't find 5 to 10, just 5 to 10 successive lower highs, right? And that's continued to also push to lower lows, it's going to be difficult to get that really nice follow through. I would say right now, every time Simon tests, and this is where it's going to be, this is a tricky area to get short. So this is the Monday candle, right? You can see pre-market, we're sitting pretty much at the lows. For me, the tactic that I like to use is, do you see how this Darvis right here has held? That's the automated support and resistance, very close proximity to the 200 propulsion. Every time we get up into that area, ideally with an overbought slow stochastic, or for those of you that like to use volume, we can look at the standard deviation of the volume weighted average price. I use a tool I created called the V-score. That V-score is indicating volume resistance. Those are the kind of things that I like to time the short in. So a big part of the shorts already happened. The problem is for me now is, who's the next group that's going to be willing to drive Simon, perhaps back down to these lower lows? So the middle part of a range that is definitely bearish, but the middle part of a range is a tricky spot. And this is where, if you're using a slow stochastic, you know what? I don't have it running on this particular screen, but if you're using a slow stochastic, at this point, crossing through the 50%, the midline of the slow stow. So the upper end is the 80, the middle is the 50, the lower is the 20. So 80 is resistance. The 50 is going to be another layer of support. 20 would be support. Crossing through the 50 at this point would be very, very helpful. That's the way I would take a look at what's going on with SPG. All right, next up, can we take a look at Visa on the daily chart? So yeah, Lincoln, if you're in from that level up there, yeah, that's a great short from that 200 to that Darvis zone. All right, so Visa, can we take a look? Yeah, on the daily, sure. And ultimately, editor, and you want to look at, I like the daily long. I don't have a zone. So kind of going back to the idea that we can be bullish, but not having have a buying opportunity, right? And that's kind of where I am on Visa, where I know my directional bias. I know I would like to be long, editor. The challenge is from where, and that from where reminds us that if I'm going to be long, is this a level of support? Another way of looking at support is buyers. Another way of looking at buyers is demand, right? So those are all the three things that we need. We need people to step in and support the market. Those are buyers, and buyers create demand. I'm not at a level like that right now. Now, what might be a level like that? Well, let's take a look. I like to look at volume. Volume tells us where there have been buyers before, where that demand has been before. And that's sitting at around 229 and a half. 229 and a half is the current point of control. That might be an interesting place to look. But at the current heights, I will not buy up in there. Editor, I need a little bit of a pullback, and maybe that's going to be something that is looking clear on the 1 hour as opposed to the daily. Both are two very good short-term swing time frames. And so maybe keep an eye on both of them. All right, next up, GT. On the grab candles, do I keep the extended hours on versus just starting the indicator at the open? Oh, awesome question. I keep the extended hours on. So let's think about extended hours in two ways. Stocks, absolutely, are a 9:30 to 4 o'clock world. And while there is, quote unquote, a pre-market, it's very illiquid. But to your point, I don't like sort of the abruptness with which an indicator wakes up and starts crunching data at 9:30 if I'm using regular market hours. The pre-market allows a little bit of a running start for the indicator, a little bit of data, albeit is price incorrect in the pre-market? No, it's just very illiquid. So there's not a lot of mass opinion, right? That's what volume is. There's not a lot of mass opinion around those price levels in stocks, but I still like to keep the extended hours on so we get something already cranking away before the bell rings. However, the other way is futures. Futures are alive and well at 7, 6, 5, 4, 3, 2 a.m., right? Because the S&P futures are going to be traded by the European session, the UK session, the early US session. And then by the time the bell rings, remember, S&P is nearly a 24-hour market. So it's been trading during the Asian session. It's been trading during the European session, right? It just makes its way over to the US. And that isn't even a question. Yes, I absolutely want those extended hours because in my mind, those aren't extended at all. They're just reflecting financial centers just that happen not to be the one that's associated with the trading hours that are pretty much my waking hours, but they matter. But they definitely matter. So what people call pre-market, I just call someone else's financial center, right? So I think it does matter. Great question. Thank you for that. All right, next up is Goog. Good morning. I was going to pull up Google, Praveen. That's awesome. Is there any ETF for the euro? Yes, two actually. So an ETF alternative, which takes us away from that more 24-hour 6E conversation to now more of that truncated 9:30 to 4. However, if you want an alternative to the futures contract, which there are many for lots of commodities, FXE would be directly the currency share for the euro, and UUP would be the sort of the inverse, but equally as valuable to watch. So if I'm bullish on FXE and I want to buy calls, I could be bearish on UUP and buy puts. So FXE primarily, but secondarily, Praveen, I'd keep an eye on the UUP. Yes, absolutely. And I do use extended hours for everything. Because again, I don't think about it from the perspective of extended hours, but rather who else is awake, right? Before I was having my first cup of coffee, or I've been trying a new little drink here. Update, kind of interesting. So whatever it is we wake up with, yeah. So far before I'm awake and moving and grooving, someone else had an opinion about the S&P and crude oil and gold and the euro and etc. Right? Bonds. Can we take a look at Apple, Timothy? Gladly. Apple earnings last week. And between a lot of the tech earnings that came out, I would say much better than a lot of expectations were geared towards. There were I think a lot of bullish surprises in this previous earnings season. Apple, of course, very important stock, heavily weighted in the NASDAQ, heavily weighted in the S&P, heavily weighted in the XLK. We talk about the XLK in this room and Charts and Coffee, as well as the Sector Secrets room, a lot because XLK is unique. It's the king of the sectors. It's number one in the S&P, number one in the NASDAQ, and it's number two in the Dow. There's no other sector that has that widespread influence across all three of the major indices. So kind of interesting where it is. Apple is the number one weighted stock there. It kind of goes back and forth with Microsoft. What do I want to do with Apple? Timothy, no question. This has been a bullish stock easily since mid-March, which means buy the dips are what we want to do. Whether the dip is going to be a daily price movement range, whether the dip is going to be the 34 EMA wave, whether the dip is going to be simply, say, retracements along the path to higher highs. The place that I would look now for a buy, and it's a buy only in Apple, would start at around 169.65 and extend down to about 167.25. Now that's today, right? I'll have a different look at the volume profile. So therefore I'll have different volume ledges potentially. The DPMR, which is a volatility-based tool that is going to realign with the volatility specific to tomorrow, Wednesday. So it's always looking at 6 months and then it's going to replot for Wednesday. I'll look at that. So it'll be a minor tweak, but it's not as if from Tuesday to Wednesday, I'm going to be a bull and then I'll be a bear on Wednesday. Not at all. It's just the zones will minorly shift, but ultimately I'll be looking at a combination of support and volume and volatility. And if I can find all those in a fairly tight area, I know I'm onto something. All right. Danielle asks, Raghee, what futures do I think lead the overall market? Danielle, I don't believe in anything leading anything, right? So whether that's a leading indicator, which I think is bunk, whether that's a futures contract that leads, I don't personally believe that. Because if we take the word leading, what we're really asking is there a particular contract or stock or indicator that can tell the future, that moves before everything else does. And I don't necessarily believe that to be true. Because let's think of it this way. If the NASDAQ's moving higher, and the NASDAQ moving with its nearly 24-hour nature, is it going to influence XLK and Apple? I like the word influence over lead. That's just maybe my hang up. I appreciate the question. So this is the way I would answer it. And it's not often I'm going to say this. This is the only answer, Danielle. Don't let anyone tell you that there's a stock or a sector or an index or an indicator that leads. It does not work that way. So let's take the NASDAQ, and I'll show you what I'm saying and why this is true. If I look at the NASDAQ futures, they're going to influence XLK, XLC, XLY. They'll influence Apple, Microsoft, Meta, Google. So the tide, that bigger group of stocks and sectors known as the futures contract, can influence the sectors and influence the stocks. All right, but it does change. What if it's earnings season, like we just rolled out of, and a stock like Apple just released earnings, and it had an outsized move? This is why I call earnings tail wags the dog season, because Apple, during very specific times of year, 4 times a year, or when there's some sort of unexpected news, Apple can have a disproportionate amount of influence on the sector and on the index. So you see it moves both ways. So you might say, well, sometimes Apple can quote unquote lead the NAS. Yep. And sometimes the NAS can quote unquote lead Apple. So it's never a fixed relationship. If I want to understand what's influencing other markets, I start with a top-down index sector stock approach. This is something I've been teaching for a long time. We look at what the tide is doing, then we look at the boat, right? Most people like to start with the boat and then look at all the other peripheral things. In other words, the boat meaning an individual stock. I think we're always better off understanding what currencies, treasuries, energies, indices, those bigger things are doing, filter that down into the sectors, and then filter that down into the stock. And if we can go index, sector, stock, start with a larger, more influential group, the tide, right? Then move a little bit smaller and then a little bit smaller. Ultimately, what we are going to find by that process are relative outperformers. And that is where you want to be. And I hope that helps. That might be different than some other folks, but this is where I will dig my heels in and say, anyone who wants to say something's leading is just trying to sell you something. All right. Next up, how do we use the watch lists from This Week in the Markets newsletter? Praveen, put them up on the chart. Jot them down. Some folks tell me they print out some of the sections of This Week in the Markets, which is fine. Use it to take notes. That's what I'll do. I'll print out my own newsletter and I'll take notes in the margin and just sort of, that'll be my guide and my notes for those 7 days. Chart them, and that's where I'm looking for volatility and action. That's where the structure is. That's where I like the relative performance, to kind of go back up to Danielle's question. All right. And that's the way I see that. Hey there, Earl, from our training room. What factors, financial, economic, political, etc., currently inform my trading plan the most? Earl, the number one factor that informs my trading plan the most is that relative performance. Now, under that umbrella is trend. Under that umbrella is understanding the weighting of a stock or a sector in the index, or understanding what's in the index by way of weighted sectors, heavily weighted sectors, and heavily weighted stocks. So that relationship is key. And so the number one factor, I would say, is the trend. And if I found the best trend within a specific group, the best healthcare stock, or the best sector within the S&P, I found a relative performer. And where there's relative performance, there is a better chance of follow through. That's the most important part, if I'm going to be really specific, Earl. Thanks for the question. And again, just like that, our show is up. So thank you as always for caffeinating and dominating with me every weekday, 9 to 9:20. I'll be back tomorrow. We'll be back at it. Get those questions in early, and I will see you tomorrow. Be good to each other.